What is going on, everyone? It's your boy Tony at the weekly close, here to report on the art of the chart and share different points of views that we've seen being expressed over the last 7 days, all in one place. This week we're kicking off the title of S&P 500 Big Tests, Bitcoin Weekend Woes, Lows in Now or Soon. So to kick things off, we had a video earlier in the week from Games of Trades with the title "Dumb Money is Going All In on the S&P 500 Rally." This marked every big top throughout 2022. And what this kind of graph shows the S&P 500 price up above, and this bespoke indicator created by Sentiment Trader, which is a combination of many different indicators to kind of show how much dumb money, or what they're calling like retail money, goes all in or stands on the sidelines in different market cycles. And this kind of notion, and obviously this kind of is indicative of the sense of when people are, standing on the sidelines most is maybe when, smart institutional money is actually starting to kind of move back in. And obviously when markets get overheated with retail investment and absolutely everyone engaging in the market, usually is a sentiment of a top. So this was an interesting warning sign for us to kind of take into consideration with the S&P that realistically has had a good run and potentially a bit of a pullback to move forward, but we'll combine that and look for confluence in price action in just a moment. Within this video, there was kind of like a further interesting review and analysis going into what we have here being the MXWO, but the Morgan Stanley World Index. And then down below here, the all country breadth. So basically just tracking how many different various country indices were above their 200-day moving average. And this just notes basically in recent history, at least this year, that nothing was, everybody was below their 200-day moving average. And very, very quick sudden movement. We've got now 80% of countries now above their 200-day moving average of their respective world indices. And really this kind of move, the suddenness and the kind of sharpness of this move has always been a good indication, as this kind of article and graph shows. Again, this isn't the S&P, this is the World Index, Morgan Stanley's World Index, where whenever there's been a 200-day, a series of indices all above their 200-day of that greater percentage from 0 to over 90 and 50 or fewer days, we have seen growth basically, and other than in small instances ever so slightly sideways movement, but generally has been a positive indicator for good growth. But that doesn't mean the S&P necessarily will follow. It could be obviously sentiment for all other world industries, and maybe it's for the S&P to kind of move and follow ever so slightly behind. So let's look at well, funnily enough, what FTX Empire kind of posted earlier in the week, which was their technical analysis on January the 27th. And I guess the good news, as we've kind of moved on from this time, is that we know that the S&P has broken out of this channel from this upward resistance, which is obviously bullish. It's really, really interesting. Now everyone's wondering and looking for that confluence and the testing of whether that resistance is going to turn into support for a continuation for further growth, hoping that obviously this low, when we nearly reached 3,500, is actually the all-time low going forward over the last 9 months. So in the meantime, the obvious tests that we have is basically this 4,100 price, which has kind of offered resistance, a little bit of support, but resistance multiple times. So it'll be interesting to see in coming days and on a weekly candle whether we can flip this positively. The following chart from FTX, at the moment we've got silver, lots of sideways movement at the moment between 23.5, just checking, 23.5 and $24.5 at the moment, with $23 being an absolute floor held by the 50-day moving average. So again, it'll be interesting to see how that breaks in the meantime. And then interesting developments in crude oil, where we have a inverted head and shoulders at the moment, where if that was to break to the positive side, with the kind of typical measurement being the head to the neckline of the head and shoulders, that's looking like a potential price target of $95. But in order to achieve that, we'll be looking at obviously take profit points of these expected resistance from just under $90, looking like maybe $89, which is, you know, been a bit of a reaction point in history, and then obviously just shy of $95, this double top in October. Earlier in the week from Marzel, we had a major ETH update, Ethereum price analysis, long to short term timeframes, with the question basically, is it time to buy? And it kind of just started off with what we were just talking about. Actually, this just shows on that these daily candles going all the way back to January 2022. You know, we've had an entire year of this downward wedge movement within the S&P, and these are the green shoots. This is the break. We have broken even a little bit further than this at the moment. Outside of this, so this is the positivity we're looking at, hoping this is going to test, turn resistance into support, and hopefully continue. But otherwise, we'll see what happens if it does fail and break down and fall back into the channel. But nonetheless, of course, nothing in crypto is going to move without good movement in the S&P. So just an opening reminder there. But with regards to Ethereum, it was just kind of from Marzel pointing out on the kind of with these really important on the weekly candles, these monthly important price resistance that we need to keep an eye out for, kind of moving forward. So, you know, the 1700 region we've seen needs to be, you know, positively turned. And since this has been since this was shared, you know, we still haven't kind of flipped that price at the moment, but it'll be interesting to see and combine that with our observations in Bitcoin shortly. And I think what it just kind of points out, I think this is a bit of a stretch of a suggestion, but the kind of showing this kind of equal triangle here with the suggestion it could be a bearish flag, but I feel like this is a bit too much of a development if this or this is meant to be, you know, the flag pole, and that's meant to break out again. So I think this is just maybe said a little bit tongue-in-cheek. It's still technically possible to achieve a $400 price target, but, you know, I think the reality of that is somewhat different at the moment. And then going down from the weekly to the daily timeframes at the moment, you know, a lot of Ethereum has just basically been moving sideways at the moment between $900, that low earlier in June, and, you know, a $2,000 top with, you know, the 1700 resistance that we had pointed out previously. And then going down into kind of the 4-hour time frame, I think where I kind of differed with some of this observation was we still got the same upward resistance line, and it was just kind of pointing out what, you know, I guess some hopeful thinking of what might be an upward ascending triangle, this upward kind of support. But really that didn't play out since this video was released. You know, there's been a lot of sideways movement, and actually it's kind of retraced back down into this channel. So, you know, it looked like there was maybe some liquidity grabs just from others taking place in there. But what was maybe worth noting, and maybe did play out a little bit, was essentially a similar setup just on a smaller time frame, was this upward resistance actually, this upward support, and then this horizontal resistance, where again for the breakouts traditionally of these, it's the kind of the depth, the full depth of the pattern being repeated at the other side. So, and that essentially did play out moving forward. So that was just an interesting observation, but where we kind of maybe differed in that TA. Moving on to Traders Reality, releasing a really good video earlier in the week, 90 seconds to midnight. And this one's going to be quite light-hearted, actually. I think there's just some really good observations to share, and just some humble reminders of where we are in the market. And just because we have seen a really good rally as of late doesn't mean we can't see it reverse just as quick. So that humble reminder was this rally that we saw from, I guess, you know, we hit $17,500 approximately, and then regained that all the way to $25,000, and that amounted to essentially 43% upswing. and then as we spoil the story to the right, that quickly moved, back south again and wasn't the bottom. So in light of kind of the recent move that we've seen since the middle of December, or just the middle of November even, yes, we have seen a 52% rally at the moment, but I think that's where there's still some kind of caution, keeping an eye on obviously what's going on in the S&P. Is that going to fall back into the channel and lower? We've got still a really big earnings week. I know we've had good news with Tesla last week, but this week is enormous to be keeping an eye on. So whether that positivity still continues. So I guess looking at obviously the heat map being shared at the moment, lots of liquidity being held at high levels. So at 25,000, lots of liquidity, 42 million sitting in there. But at the same time, as always pointing out, there's lots sitting below 22k, above 20k, and as we know, even lower. But I mean, look at this. If this isn't a heat map of just kind of price moving towards these yellow zones where there are these intensities of capital sitting, so it'll be interesting to see how this moves in time. Wouldn't surprise me the way things are kind of looking at the moment if there is going to be a run up to 25 before taking a return down to down to these lower levels to be grabbing this liquidity. And I guess the interesting thing that Tino obviously likes to always point out is using the trader's reality indicator, whether that's on TradingView or other platforms, where obviously we can display combined volume within the candle price action. So where we have these vector candles, i.e. these high volume movements, these imbalances in the market, they generally create gaps, fair value gaps, and generally do return to those zones. So there was a general hypothesis on Friday, from him and from a lot of people who have been putting a lot of shorts at these high levels, is waiting for, I mean, look how far, the 200-day is trying to catch up, but these gaps, this delayering of all of the moving averages, everyone's waiting for price to kind of pull back into these zones to reclaim some of these vectors. And I guess it's always just worth reminding people that there's been a lot of sideways action across the weekend. But then the weekend are obviously times to always be wary, where there is a lot less liquidity in the markets when the markets are closed, when we're talking about the New York sessions, the Asian sessions, the Europe and the UK sessions. So it's easier for price to be manipulated during these times, and always all traders and all investors should be wary of obviously buying anything during this time. There were no kind of releases from kind of Green Star Trading to kind of be reporting on Elliott Wave this week, unfortunately, but I thought this was just maybe an interesting time to kind of maybe just double check and recap against some of the previous information that they shared, just to see how that's holding up at the moment. So I guess with all this focus on the S&P at the moment, with regards to kind of the kind of bearish count, or one of the counts that were kind of being presented, 410 was being shown on the S&P as a invalidation point for this count, and right now we're hovering, we're just at the purple line of 406. So it'll be interesting to see if we do get this, does suggest and support the idea of have a retrace and this falling back into this channel. But if this does break and we go above the kind of 410 mark, it'll be interesting to hear and see how that recount is going to take place, because if this is, as this suggests, a wave one going into a wave two, where that wave two can retrace as much as 99.99% of the wave one before the wave three, which is the strongest in an impulsive action, well, if that's invalidated, well, it's going to be back to the drawing board. But and that's precisely what we're just looking at. It'll be interesting to see how this thought still plays out moving forward, and whether that affects the larger count of obviously the wave two, the larger count of the wave two at the bottom being earlier in the year, and continuing into that wave, the larger wave three. So interesting to see how this week's price action news and movement is going to further support this count. A little bit of on-chain thought. Glassnode published a really good video. The week on chain, opportunity or a trap? I think a question that everyone is somewhat thinking at the moment. And there's just basically kind of two dashboard pricing models that I think are just quite interesting that I just wanted to share. So the first one is this one. This is investor and delta pricing models, where I mean, I don't want to focus too much on anything other than really this investor price, which is the difference between the realized cap, which is, you know, kind of a summary of all of the all Bitcoin at the price at which it was transacted divided by the circulating supply, and the firmo cap, which is basically kind of the overall price that all miners need to kind of be locking and securing the network, essentially. So I guess if you've been keeping in tune with news, the general kind of question of what people, or you might have heard that there's a lot of miners right now putting down tools, you know, really just turning off all of their mining stations, waiting for a recovery in price, because as you can see, price is dropping below this kind of green line where actually it's costing money. There's no money being made with Bitcoin at these current price levels, with all of the effort that's needed to mine it and secure the network. But nonetheless, what this kind of just points out is, it's very difficult to see, but this kind of green highlight of these rare moments when price drops below the investor price, 1, 2, and 3. I mean, it has been something of a signal of obviously a subsequent bull run. You know, these don't happen often. So the fact that we're experiencing that right now, it'll be interesting to see how it plays out. And subsequently was just this graph of a percent supply in profit. So I just kind of added these lines just for the clarity. So in blue is the amount of circulating supply of Bitcoin that is in profit or loss. And if under 45% of Bitcoin is in profit, then that's what's highlighted in red, basically whenever that blue line is underneath this dash line. And whenever there are areas where 85% or more was about something, 80% or more are in profit, is highlighted in this green, i.e. the blue line above this dash line. And basically, they're just kind of interesting, very just simple metrics of showing overheated and oversold markets, essentially. So, you know, when the green ribbons have been showing and most, you know, over 80% of people are in profit, usually a signal of tops, and then we've, you know, regressed and gone into bear markets, and the exact opposite, essentially, of lows, and, you know, the kind of continued action, at least at the moment, of I guess what's just really interesting is that spike up at the moment. So that movement of us going into this neutral orange territory, and how long do we kind of reclaim that and hopefully flip that into the green. So, you know, an interesting sign and thing to consider on the metrics. And then just kind of a final bit of news that was actually quite interesting from Invest Answers earlier in the week, which is just about a video on picking and choosing certain cryptos. But I just thought it was just really interesting and good to kind of share and remind people of the daily active users under certain currencies. I think the kind of prevailing message of the video was being aware of the circulating supply of any cryptocurrency that you're kind of looking into, and obviously being aware of the kind of inflationary or the issuance of coins and at what rate that is being kind of shared. Obviously, if a company was you know, good news for companies all the time in earnings calls is if they're buying back stock, and bad news traditionally is if there's a secondary offering, i.e. they're having to sell more stock. Essentially, if you've got you know, a lot of these, I think optimism was the subject of one, where obviously a lot of these coins are being run like companies and have prescribed timings where they want to issue a lot more supply into the market. But obviously, if, you know, demand supply dynamics, obviously, you know, Bitcoin being capped at 21 million, it's something to be kind of wary of anyway. But it's interesting as a market cap divided by daily active users, you know, and Solana, you know, being, you know, I think so heavily used, but you know, coming up top there. And it was just an interesting kind of comparison, the inverse of, you know, Solana truly trying to be, you know, a form of payment, casual everyday payment, versus the store of value alternatives that we know very well, obviously at the bottom. As always, thank you very much. Like, comment, and subscribe. And, please stick about. And we'll be back with you next week. Wishing you all the best until then.